There we go. I'm still cold, so I'm still. Actually, it's really bright, isn't it? I'll calm down, no doubt. The sun will go down in the UK. Yeah, how are you doing? We've got just seeing how many people we've got in the room right now. Can't quite find that, but I will look for it in a moment. Let's talk about the markets and let's talk about current drivers. I have got a short on the FTSE currently on the go. I'm not sure where we are. Okay, I can't see. I can't see the YouTube. This is more a message for you, actually, Mai. I can't see the YouTube, so you might need to put in. You might need to put in the questions for me if that's okay. Can't quite find where we're live on that YouTube thing. Fantastic, thank you. Right, let's talk about the markets. Let's talk about what's been driving the markets, and let's talk about what's going on right now. So I am short FTSE now. It's a trade that that may just tip in the other direction a little bit first. I've scaled into it, so I'm short here and I'm short here. It could change. Because we got Fed Chair Powell out later on. So let's just have a look through some of these data points. Decent surge to the upside after yesterday's end of day sell-off in the FTSE, and I still believe there's probably the market's probably a little bit overvalued. I'm still pretty negative on the CAC and the French market would be the one that I would most favour a short with, but I haven't managed to. I haven't had the time to do enough research on it to be confident with that one. So I've decided to go with the FTSE. I think they all come down a little bit. Not too sure on the American market, with the US dollar continuing to be so weak. Then US equities still look pretty attractive. But if we have a look at what's happened to the pound. It's been fairly choppy over the last couple of days, but it's still kind of promoting a little bit of upside here. If the pound comes down and the dollar goes up, then I would expect equities probably to at least stabilize. But I just think we might be in a bit of a phase where equities could just weaken a little bit here. Now this looks a lot better on a daily chart, which is really what I'm looking at, but the reason I started scaling in where I did is that I just started to see this kind of area here. So as the market pushed up there, I scaled in. It's pushed up a little bit further, so I've scaled in. So I am short, but my idea really with the FTSE is to go long and keep these shorts in the market. So it's a short to go long kind of scenario here. I am bullish on equities in the longer term, but I'd like to see just a bit of downside. If I can get the monthly pivot, that is going to look brilliant, because the monthly pivot is beautifully in line with this horizontal level of support here. And if we just put this horizontal level in a little bit of context, you can see that there's a little bit of price action around here, which is possibly a shade confused, but generally speaking, it managed to kind of like battle that zone out, and I suspect that might be the area that we pushed up through, and we could come and retest it. So I'm trading the FTSE short to go into this area, and then I'll flip my position to go long, leaving the shorts on the table until I'm fairly comfortable with the long, and I can get the stops at break even. So I'm aiming for around about 60, 80, 60, 90, maybe 60, 100 or something with the FTSE 100 to the downside, if possible. It might not quite play out quite like that, but that's my soft target down there. Now let's just bring up the fib. Oh gosh, I've got a different fib on this now. Let's take that off. I've just had to put a different fib on because we're running an event over the weekend and I needed a different setting. So what I'm going to do is show you it on a different chart instead, different setup instead. Let's do this. There we go. Now, my play on the short with the FTSE in this market is slightly different because I've got a long already in the market, so it's a bit of a hedge against a short. But ultimately, it's the same. It all means the same thing, that we are looking for I am looking for a short in the FTSE. Let's just have a look. So on this chart now, the price will be different, but visually you can see it's kind of the same. It's around about that level there. If I can bring in a pivot here, is that point there, 60, 80. Now if we bring that clean chart back again, it would be the monthly pivot sits here at 60, 80. You can see this price action here looks like an area it would have had to break through. It's tested it once already, so it looks like a decent area. And the fib also is confirming that the price is going to be in and around this point here. So 60.80, so 60.90 on your charts. But as I say, I've got the futures on here, so I'm looking at this now. The pattern really, I mean, this is a very, very negative looking bar. We can bring it back to the other ones actually, if you prefer, the other market, so you can see this is a very, very negative bar yesterday. It will look different on this than the futures, because the futures trade at slightly different times, but the resulting picture's the same. And what we do have is a Head and Shoulders. Now, I know and appreciate there are some fairly new people in the room, so I'm just going to explain the Head and Shoulders pattern. I know many of you know what it is, but I'm just going to explain it to the people that are new in the room and show you why it is a tradable place for me. And the Head and Shoulders pattern is something that you will find in an uptrend. An inverted Head and Shoulders is something that you will find in a downtrend. Now, with the Head and Shoulders, you'll see an uptrend happen like this. You'll see the market make a high and come down, and then make a fresh high and come down, and then make a high but a lower high. So that would be the original high. It comes down and makes a low. It makes a higher high. It makes an equal low. So I'm going to put EL, and then it makes a lower high. And that creates the Head and Shoulders pattern. So there's the left shoulder and the right shoulder, and there's the head there. And this is a signal for distribution. So the smart money starts to distribute their shares in these areas to people that are still bullish on the market, and the market will tend to fall around about 30% of the time. So it's not a really strong signal, but if it happens in context with other things, then we can give it a little bit more trust. And the traditional way to trade it is to trade when it breaks the neckline and down. But I like to try and pick it up on the left shoulder, on the right shoulder, sorry. Because what that means is that you can take a bit of profit off the table here. If the market goes through and comes back, you can add that same trade back on again there, because they only work out 30% of the time. What can happen with the Head and Shoulders is that you get this kind of scenario here, where it comes back down to the neckline and then bounces to the upside. So if you've got in here and got profit down here, then you really you can't lose on a pattern like that. So that's why I prefer to try and pick it up on the right hand side. Now, not easy to see, but this is the neckline, and obviously anything in the market is not going to be, very, very few things, I should say, in the market are going to be really clean. But all we really care about is not whether we have a name for a pattern. What I care about is what does the pattern that I'm looking at currently tell me, and whether I call this a Head and Shoulders or something else is irrelevant. But what this tells me is that this is the head up here, this high up here. This is the left shoulder here, and I'm looking at this area here being a right shoulder. So it's quite slim, but I'm looking for it to trade it back down to the neckline, and beyond, and then see a bounce around about there. So that's the idea with the FTSE, and I'm a little bit bearish on global equities. Now we're going to be talking about cryptocurrencies very, very shortly, because Shukri is going to be taking us through what's been rocking and rolling with the crypto world. I see a little bit of a pause today in the crypto markets. Bitcoin making a fresh. Did it make a fresh high in the end? I think it did, but it's certainly pushing near that area. But the other instrument that I'm really interested in is gold. Because I think gold may have bottomed out. Now, gold, as I was saying yesterday, was that for me, Mai? Yes, we're live. I knew we were live. Somebody else is in the room. Who's in the room? Oh, did I? Sorry. Okay. Fantastic. All right. Apparently I asked earlier if we're live, so I'm just getting a reply. Okay. So gold is the other thing of interest. Now, let's first of all think about the reasons why we might trade one thing or another. Okay. So this is where gold starts to play a part. So this is why we kind of might start to look at specific instruments. If we are bullish on the market, okay, we are bullish on the market. We want to be buying things like equities and oil and things like that. So buy equities, so S&P and the Dow and all that sort of thing. Buy equities, we'll buy oil, and we'll buy things that are Aussie kind of related, Australian dollar related. Now, what would make us bullish on the market is high risk sentiment. So we want the risk sentiment to be up. So risk to be back in, and things that do that are things like vaccines. So when the vaccines that got announced, then it made people more bullish on the market. Now it also something else that might promote us to want to trade equities are things like central banks. Central banks putting money in the system, so funding the system. Now that has gone on. That has gone on, and this may well continue. We're going to hear from Jerome Powell at 3 o'clock, and I think that might put the brakes on the move to the upside, at least for another hour or so. So central banks will fund the system, and that will make us bullish on equities. But the way we can protect against that is keeping these trades in the market, but buying protection. Now, there's certain things that we would do to buy protection. We might buy the VIX, or better still, we might buy gold. Now, Shukri will tell us whether buying cryptocurrencies is against protection, and I suspect it probably is. But the thing with cryptocurrencies is that it's almost acting a bit like markets go up, so you buy cryptocurrencies. Market goes down, so you buy cryptocurrencies. Now, it will provide protection on a certain environment, but not on other environments. And Shukri will explain more about how it becomes more of a hedge against risk, and what environment we might need to see for that. But gold is a hedge against risk as well, and this is one of the ones that I would favor. Obviously, silver falls into the same thing. So what we can do is buy this and keep this. So we don't have to close our equities and this is just a broad way that that speculators will behave. They won't necessarily close down their equities if they buy some risk. So what can happen is that equities will go down and these things will go up. And it just means that our risk is hedged. And when things start to calm down again, looking for further upside, then something like gold will then be reduced. Your gold exposure would then be reduced. If there's a little bit of risk, you might increase your gold exposure, and if there's less risk, then you decrease your gold exposure. And there's this balance. They call it a 60-40 between bonds and equities, but you can use it against anything. Really. So my personal thesis right now is that I want to hang on to my long in the FTSE that I'm in at the bottom, for as long as there is no huge issue in the globe, because I think that ultimately markets, they do tend to go up. So if I believe I've got a good price down here, where is it? You won't see it on that platform, but you'll see it here. Now I've got him right at the lows down here. So if I believe I've got a good price, which I think I have, then I don't want to get rid of this position. I might play with some shorts when it starts to move up a little bit while keeping this on, but ultimately I'm long. I want to keep my long exposure with the FTSE. So the way that I can protect against that, usually when you add to a position, the second position is only added when another. So I'm just a question from Fad is usually when you add to a position, the second position is only added when another retest happens, or if it doesn't retest and the trend is along with your bias, do you add? So where I add is as low as I believe what I am bullish on will come to. So with the FTSE, I want to add down here, but you know, it's no different to when I added to Ethereum. I want to add down here, but the market may not offer me that. And if it starts to put in some sort of reversal pattern a little bit higher than I'd want, then what I'm going to say is, well, maybe my projections are wrong and we're not coming down to that point, but we're coming down here. I'm okay to add here, so I'll add some here, and then hopefully it'll pick up. If it falls again, then I'll add in my original position. Because it's an add point, I'm protected by my original trade, because I've already got plenty in the bank to kind of like, you know, give me some room. So I might end up adding a little bit higher than I wanted to. So let's say, you know, with Ethereum. So with the add, so for me, and I guess this is part of your question, for the way that I like to trade is that I like to add only when I've got some clear water between my original position. You know, I won't be adding, for example, I wouldn't have, let me see. If I was short here, when this comes down and comes up again, then I would consider an add point here, but I wouldn't consider adding if it popped back up again. You know, I wouldn't consider adding again if it came near my entry. So I want to see the clear trend, and I'm basically sort of trying to trade. So I'll be quite happy to go here, short here, and short here, but this would be no good. You know, that's a little bit too close to my position there. But when it comes down here, then I'd be happy to go short there. So I want some open water between my positions. Now, that does mean that whatever the retracement, as long as the retracement closes under this point, then this whole area for me is an add zone. You know, I've got enough room, and I'm just hoping that there's more of a retracement here. I don't know if it's going to come or not, but I'm hoping there is. And my position right now on global equities is that what happened when the virus announcement was released, and what happened with Biden getting elected to the White House, is that this thing here is just a little bit overcooked. I think it went up a little bit too much. So I'm just looking at it for a little bit of a drift, and anything between these two areas would qualify for me as a decent enough add point. And I don't have to be very precise because I've already got enough in the bank to cover myself. But for a legitimate entry, right? But for a legitimate entry, yes. If there isn't an entry on the retest, so other tools come into play. Yeah, exactly, Fad, exactly. So let's say that my first port of call, the way that I will trade, is always on price. That's my first port of call. I want to find the price that's most likely to get rejected. Now, I've been wrong this morning, but the way that I will trade it, and I'll show you on this chart instead. The way that I will, so this morning, I opened things up and I thought, right, this is a good area to look for the shorts, and the reason for that was that it's not that level actually, because this area now is problematic. It could now bounce from there, and potentially it probably will. But I was looking at the 4-hour chart and I drew a little trend line over here, and I thought, well, it's got to get through there. You know, this looks to me like a break and a retest. So most people will wait for confirmation. I don't wait for confirmation. I'll just wait for the price to get touched and then I'll get in, because I think it's going down. You know, my overall thesis is it's going down. Now, if I go in light enough, I've got some room to say I may be wrong, but what I'm after is structural points. At this, in something like this, we're in an area here where, you know, it could collapse, and I want structure. So when I think of structure, now we talked a little bit about price action yesterday, and what price action will do over a course of any given period, it will create a pattern like this. And here's the low of the pattern, and here's the high of the pattern. Now, if things break out, this is the area it broke through. However, it may come back to the low and still be valid. So if it comes back, I'll add here and I'll add here. And that's when I'm wrong, because at this stage, trend is still up. You know, there's a higher high, I just don't know where the higher low's coming in. You know, I'm assuming there's going to be a higher low. I don't know what it's going to be, but this could still be an equal low. So an equal low or a higher low is valid. So I can trade at these 2 points. So what I will do, you know, just to kind of go back to your question, is I will pick out a price point that I want, and it's here. And whatever happens, I'm buying here. Okay, I'm going to be a buyer at that particular point, and the only reason I'm a buyer there is that I've done enough research on the FTSE to suggest to me that we aren't going back to the lows, to my mind, and I may well be wrong. We can always be wrong, but I'm a buyer, so I'm going to buy here no matter what. However, the one thing that would change where I buy is if it doesn't come here but creates an entry. So this won't require an entry. This won't require a signal, which is the point I'm trying to make really here. This doesn't require a signal for me to get in, but when if it comes a little bit shorter, it will require a signal. So if I think about Ethereum, when I traded Ethereum, sorry to keep flipping accounts, but the other account doesn't have cryptos. But Ethereum makes the point for me. So this was my point on Ethereum. Where I wanted to get in on Ethereum was down here. I wanted to buy it down here, really. Again, that's my original entry, and I wanted to add to it down here. However, what ended up happening was Ethereum came down to here and started to create a bottoming pattern. You know, it looked like it was starting to accumulate. So, you know, I'm looking down on the charts here, and I'm sort of like thinking, well, maybe this is it. I'm bullish on Ethereum, so I don't want to go long. This is you know, this is an area that looks like it's holding out. I'll add here, but I will still add down here if it does fall. So this requires a signal. This doesn't require a signal. Now gold's the same for me, and this is where I was going really. I've got an order here for gold. It's not that isn't triggered yet, but I've got an order here for gold because the way I see gold is that it could come a little bit lower. You know, I'm bullish on gold. You know, I think that there is inflationary issues coming for the planet, and I think that we should probably buy some protection anyway. So where I want gold is down here. I want it at the lower end of this structural area. This was the previous structure. It's the lower the structure here. And there's the high of the structure there. I wanted it at the low end of the structure because this is the trend line, and also, you know, if I bring up fibs or whatever else, then it may well bring me to that point. But what's happened with gold is that it's just come down to here, and it's started to bottom out. So what I'm saying to myself is I might need to get in here, and this is where I'll start. Yes, as you say, bringing in other indicators of where the price might stop. And that's when I have to start going, right, well, where's the fib on gold? It's actually a little bit lower in accordance with the 38.2% retracement, and I've just measured basically the whole run, but it might, you know, the fib might not be there. If we bring in this with pivots, then there are pivots down here as well. You know, it's only on a daily, and the weekly is a lot more interesting, but somewhere around about here there are some pivots, and we also know with gold that there are some seasonal patterns that are due relatively soon. So these are kind of, there's a case to be made to say that gold is going higher. Now, what I would like to see with gold is a bottoming pattern. So where we just talked about the head and shoulders being a topping pattern, and a distribution pattern, this might end up being an accumulation pattern where we see the left shoulder form here, we see the head form here, and we see a right shoulder form round about here. So you know, I've put the order into trade around about the right shoulder. So this area looks like a head. That looks like the neckline. It appears to me that gold could come back a little bit and then move to the upside. Where gold is in you know, it may not come back to where I want it, is because we got Jerome Powell speaking relatively soon, and he might put pay to any decent trade ideas that are being had today. Now there's a trend line along there as well, so it might pop up a little bit higher, but I'm looking for a bit of retracement, but this is starting to look to me like a potential bottoming pattern, and I'm okay getting in here, but I will go in light. And that's the thing, if you I mean, I don't want to tell anybody how to trade. I'm not trying to kind of teach you guys how to trade and how to manage your money, because I'm sure many of you know. But all I can tell you is that the way I would do things is that if I go in light enough to protect a big space, then I can add. So you're in on gold, fantastic. After it bottomed at 6, oh, you beauty. And then after side and bounce on the DP, I put upper fib, enter. Beautiful, mate. Is it considered legitimate? Okay, let me just see. So you got in on gold at 1665. So you're not on the futures, are you? You're on spot, aren't you? Let me just bring up spot gold. I'm just going to get rid of this for now, so it's out of the way. Right, you're on the spot price. So let's have a look. Spot gold. 1665. Oh, after it bottomed it. Sorry, I thought you were in at 64. Geez, Fad. That is insightful. Okay, let's have a look. You put a fib I put the fib and entered on the 61.8 on the H1. So you put a fib here. Oh man, this is the wrong fib. Okay, I'm going to have to reprogram this fib, which I will do. Yeah, that was the fib, was it? And it was just a retracement onto the daily pivot. I mean, it's a fantastic entry, mate. It's a great entry. So yes, it's very legitimate, very legitimate. Now the thing with this is that this is where, in my opinion, and I can only ever tell you my opinion because I don't know, the way that people want to approach markets. I don't know whether people want to get in and out of positions or whether they want to have a longer term view. But in my opinion, the best way to trade is to try and get an overall idea of what you want to do, and then try and express it for a significant enough of a period for there to be some movement in your direction. So you're in here now. Is there a likelihood that you could get stopped out? Yeah, it could happen. It could happen because the thing is, you've got this trend line here, so it may well get rejected and it might come back down again. Is there a likelihood you could get stopped out? Yeah, it's there. Is there a likelihood that you've picked the bottom? Yes, there is as well. And I tell you, this particular pattern is the one to watch. This is where your trading skill has to come into play. This here is looking right now like a morning star. And the morning star is a pattern that has a bar that pushes down, has a bar that effectively holds and gives us a hammer or a low test bar, and then a takeoff bar which closes at least 2/3 into bar number 1 here. Now that is what we've got here, 3-bar pattern, and that's looking like a morning star. So as long as this bar ends up closing at least above that point, that is a bullish signal, and that is a sign that gold is holding. Doesn't mean that that it's necessarily going to hold there. But what can happen is that you're going to have to live through this potentially, is that this area here can get retested. The previous point of the breakout of the last bar can get retested. So if that happens, I'm going to be a buyer, but by that time you may well have been giving up a bit of profit. So it depends on how much you've got on and how much room you have to the downside to protect this position. I really like it personally, mate, and I would want to hold on to a position. If I'd got in down here and the market's already started going up, I'd want to hold on to this position, with everything that I had, because I like gold. I think that gold is something that's really important to have in a portfolio if you're going to balance things up a little bit. I think equities are important too, and oil traders. I understand that position, and I understand and cryptocurrencies. So I think you've got a good trade, but the thing is, the danger now is that you look on over the wrong time horizon. If you look on a short-term time horizon, now's the time to get out. If you look on a longer-term time horizon, you want to hold on to this for dear life. In my opinion, and that's what that would be my approach. I'd be, if I've got a good entry, I'll be thinking, right, let's hold on to this for as long as I can. But my portfolio is slightly different to yours, because if I've got a long on the FTSE is likely to go higher and gold may come lower, and they're going to counterbalance each other. But what you can start doing is, if you've got a good position on gold, you can now start to look at going, right, let's hold this, let it go up a little bit, and if the market comes down, let's keep holding on to this and buy some equities, buy some risk, because this is kind of risk off. So I've got my risk off, that's covered. Now let's get some risk. Right, I've gone slightly over time, and I don't want to go too far over time because of the next show, because we do have Shukri, and he was bursting at the seams yesterday, and I'm sure everybody's in the room to listen to Shukri anyway, not me. So I'm going to say adios to everybody that's in YouTube, on the YouTube channel. I hope you guys learned something from the session. If you did, please hit the like button, and we will be back tomorrow. In fact, Geoff will be with you tomorrow, and then Geoff and I will be with you on Thursday. So for now, I bid you adieu.